Good morning, Predicted Trades family. Hope everybody is doing well. Gonna give it just a minute in case folks are still loading in. Gotta let everybody know we are live. It's time to go. So, good morning, everybody. Hope you're doing well. Hope you had a great day yesterday. As always, we'll do a little recap. Morning, Doug Fresh. Morning, Richie. Good to see everybody. So, yesterday, the overall thesis was we're up near squeeze tops before open. We kind of had our pre-market high and started a fade into close, right back into those squeeze tops. We open right at it and start to dump, right? The overall thesis was we have support down at this trend line from the lows. Right? This started off of last week's lows. This trend line has been carrying us up. Bounce, 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 bounce. Carry, carry, carry. So, yesterday the overall thesis was we're opening at squeeze tops. We most likely need to return to test the trend. At the same time, we were rejecting the daily 8, which is this cyan line. I have coded daily moving averages into a tool that plots them as nice horizontal levels so that we know where they are every day. So, running up into yesterday, we were rejecting the daily 8, rejecting the daily 8 repeatedly. Then we gapped up and above the daily 8, and we were opening above it. So what used to be resistance has to then become support. At the same time, we had this hash line, which is a daily Keltner. So with that daily Keltner and that daily 8, we had a zone of resistance, and then that zone needed to become support. So the overall thesis yesterday, we're opening at a squeeze top. We're in a downtrend. Play that down to support. There's that daily 8. There's that hashed Keltner. That created a great zone to catch this fall and send it right back up. Buyers should be present at that zone and also at this trend line, which has been the trend line that we keep bouncing at every day as we go higher. So we played it short down to that zone and that trend line. We locked up our puts. We switched to calls, played it right back up to squeeze tops. We got ready for Powell around 2 o'clock. And as expected, the algos love to dance whenever Powell is singing a tune. So we hit the top squeeze, we drop straight to the bottom squeeze, one more tap of that daily 8, setting a higher low, and we rally into close. I spoke about it yesterday. There are times to short when it's a clear path to support. Once we have gotten that support, we need to just be ready to go long. And any shorting that we try to do in that span is just pullback shorting, not a true change of trend, right? When it came to Powell, I know some of us nailed that downside, but then not everybody switched to that call side, even though we got a very clear W here. So just always be ready at squeeze clouds to change direction. And when we arrive at like the tops of the squeeze, don't immediately start shorting every pop when the overall trend on the day has been up, right? We didn't even need to have this dip. We could have just rallied and stayed into close at the squeeze top. And frankly, this little dip was just because there was a mock sell coming up, and even the mock sell was pretty weak. So we kept grinding higher. Now, coming into today, if we take a look, before I even start to talk about the thesis, what do you see that's happened over here? Right? We have a squeeze that's come into form, a new one, a 1 hour. And no coincidence that it's the bottom of that squeeze top is right near these highs. And the bottom of that squeeze is right back near yesterday's lows. So we have our range for the day set. We did the same slide back after hours to support, and we're starting to bounce. If we go back just a couple of days, we had the same thing, Friday into Monday. Strong day Friday, we fade to the support to carry it into open, where we have squeezes. Today, we've been fading into support, starting to bounce, and we have squeezes. The only difference the other day is we were running into squeeze tops before open. Right now, we're down near squeeze bottoms. We do have a little bit of economic release today. It's, if I believe right, it's new housing starts, which doesn't usually cause a very big reaction. Come on, there we go. Wednesday. Yep, new housing starts. And one Fed speaker at 4, so after close, no worries there. Tomorrow we have initial jobless claims. We have manufacturing index. Really, like those would cause larger reactions than housing starts, most likely. Yeah, and those are usually really close to being in line, so no big issue there. We'll see what we get at 8:30 in just a few minutes. But overall, we'll be opening near the bottom of the squeeze near our support. On the trend line, we also have the daily 8, which is stepping up because we are moving higher. So I can foresee that we could slip outside of this squeeze and outside of this trend line just enough to tap that daily 8. Maybe at the lows this daily Keltner, but really at that point we have broken the trend carrying us up, and we're reaching a little far. I can allow a little bit of slip out of the trend to hit the daily 8, but if we slip out and then reject trend and then fall through daily 8, we are changing trend. You know, there are some times when we can slip outside, just like on Monday, when I said we can slip outside of this enough to tag that squeeze bottom, but we need to keep getting back above and bouncing at it. And that's what we got. So, very similar to today. We're allowed to slip outside it just a little bit to tag some support, like that daily 8. But after that, we need it back above this trend line to carry higher, We are bouncing at these squeeze bottoms and kind of shoring up this trend. So we could, at open, just start our journey higher. We do not need to tag the daily 8. We did it multiple times yesterday. And if we push off of this trend line and get back to VWAP, we have the daily 8, the daily 15, which is this orange line, just like the daily 8. This is the daily 15 moving average, which, just like the daily 8 was resistance, yesterday the 15 was kind of resistance, and we are below it still, so it can still be resistance until we get through, then it needs to become support. We do have the top of the squeeze right up around that 4,100 and the overnight high. So overall thesis, want to hold the squeeze bottom, want to hold these trends. It's daily 8, push off it for a nice rally up to 4,100. We are still in an OPEX week. Let's not forget, OPEX week means on Friday there are a ton of options that are expiring on the monthly time frame. So every month there is an OPEX week. We should be prepared for it. It can lead to chop, just like on Monday. And some might even say yesterday was a little choppy or a slow grind, but this is OPEX week. Chopping in a range and a slow grind higher, chopping in a range and a slow grind higher. Even if we do break this trend line, it could be a slow grind back down into the range we were in. So, we've got targets to the downside. Should the trend line give out and we start to reject the daily 8, slip through the Keltner, we'll be going back to test 4,000. 4014 is pretty key as well. But overall, kind of expecting us to stay within this 1 hour squeeze today. Given that it's OPEX, they might just keep us in a range. But so far, nice bounce off the bottom. Let's see how we deal with this trend. We have our econ data coming in a minute. For all we know, we might be opening right back up near these squeeze tops, and the premise will shift slightly to a rejection of squeeze top, a pullback to test things, to use them as support, right? And then we'll get going. In Q, I'm sorry, let me go back to ES. One last point to make, because I don't have any of my key levels up. There we go, now we got some key levels. This 4056, very key on ES. So as we get above it, especially as this econ data comes out, they pull back from VWAP. Like if we tap VWAP and start trending back down before open, that 4056 could be key, and this squeeze bottom. And then 4101, very key up at the top. The shaded area is Monday's high and low. I like to mark Monday's high and low just to let me see where the range of the week started. We are trying to get out of that range of the week, but we're coming back to test, right? Again, not a coincidence. I love it when things line up. Now that daily 8 sits right on top of Monday's high. Just giving it some extra support that it should hold. But basically, if we lose it, we can come back into this zone. We can even get to lows. NQ, same thing. Marked the high and low. come on. Well, it looks like this might be actually last week's range from last week's Monday, yeah. So again, starting to, here, let's just back up. Here we go. Yep, this is last week's range, high to low. While ES got out of last week's range already, we go back to ES. Oh, no, apologies. We're pretty much still in last week's range. And I updated it to this week's range. Yeah, 4065 being the sticking point. Sorry, I'm just kind of checking in on other things. So yeah, I want to see these levels hold 4044, 4050 to head higher. 4065 is resistance a little bit from the high from last week. Once we can get through that, we can definitely start trucking up to 4100. Now let's move on. NQ, kind of the same deal. Peaked out of the range for a little bit, but now we're back in it. We have a trend line from the lows that we're testing at the bottom of this squeeze, and we have the same cyan and hash line, a daily 8 and a daily Keltner as support. Want to see us hold this and head back up to keep this trek higher. But we have to be cognizant of reversion to the mean. We usually refer to the daily 21 as the mean. The daily 21 sits a little higher, right? We haven't quite gotten there. Sometimes reversion to the mean can just mean getting to the daily 8 and not getting through it, or the daily 15, and then we head lower again. So we do not have to get back to the daily 21 to head back lower. We can reject these lower moving averages and continue the downtrend. So I know that sounds a little counter, like I'm contradicting myself, but in a way, we need this daily 8 to hold. This is just every trading thesis for me is if this then that. If we can hold the daily 8, we can move higher through the 15 to the 21. If we reject the 15 repeatedly, which we haven't quite gotten there yet, but if we get there and reject it repeatedly, we can slip back to the 8 and we can dive. If we don't even get to the 15, if we give up this trend line and fall out of this squeeze, losing the daily 8 and this daily Keltner, we are basically getting a moving average, a mean rejection to head back lower. So, going to be key today on can we continue this uptrend to break out of this range and get back to the mean, or have we made it and we're not going to get out of this range and we slip right back down. So today going to be interesting and key. We could easily just chop in the squeeze, stay above this trend and above these moving averages into tomorrow. So that's kind of the upside downside targets on NQ. Down 135 points. The mean is up at 800. It could get to the mean today. It really could. These squeezes were more compressed, and now they're starting to open up a little bit. So we can run into them, have a pullback, and then take off higher. Absolutely. Alrighty. Ooh, already's almost back to the mean, and it is above the daily 15, or at least it got above it a little bit. I like to kind of say the ruddy can react first as far as the thesis, like can we get through the daily 15 to get up to the 21? The ruddy was the first to get through and kind of use it as support, slipping it a little, but it doesn't take much to get back above it, use it as support to move higher, So definitely watch the ruddy for this interaction at the 15. And if it loses it, to head back to the 8. That could be kind of our first signs of losing the uptrend. YM has already made it to the 15, pulled back just to the 8. Now it bounces around the 2. This is very common since we have been in a bearish trend. To get into a bullish trend, when we arrive at big moving averages, I like to think of daily moving averages as liquidity areas. We can move away from liquidity, but then we are always going to work our way back, and we're going to shore up liquidity, meaning bounce around where different institutions load at different moving averages. So, YM, I love this setup today to tell us if we're going to give up the trend and head lower, or if we're going to shore up liquidity to head higher. So basically, YM has to hold that daily 8 today in the squeeze bottom. Since it hasn't made it above, keeps bouncing, it's just building energy to take out the daily 15, get to the daily 21 for a full mean reversion. If it just keeps rejecting the 15, setting lower highs, draw like a trend line from overnight from the highs, if it can't get through that, starts to lose this daily 8 in the squeeze bottom, we are most likely going to head right back down into our range in this 31,800, 32,000 level. Alright, moving on to Apple and individual names. And at any point, if anyone has any questions or anything, you can feel free to drop them in the YouTube chat or in the Discord server. And I'll address your questions or any ticker that you might want that I don't normally cover. Apple. We talked about it last week, losing 155 and 150 would send it down to previous all-time high. It made it to that zone and started the uptrend. It's been very gradual and, at least during the day, very choppy. Not surprising on OPEX week. The choppier it is and the more we stay in this range, the more the higher time frame squeezes are going to set in. So now we have a 4-hour. And that 4-hour, that 4 hours getting pretty wide. From, 151 down to 141, just about. And we have this nice little 30-minute squeeze in here as well. This 30-minute squeeze should act as our open range, our opening support and resistance. And should we lose our support, we will fire this squeeze to the downside to start testing lower levels and where these squeezes used to be or still are. But if we can hold this 30-minute squeeze bottom, the uptrend, catch a bounce to go up to test these tops, we could likely get through this daily 8, which is coming down at these highs, and start the journey up to the daily 15. The daily 21, which are making a nice zone right around 155. Again, not a coincidence. So, let's see if we can take out this 150, big cycle level, squeeze top, daily 8, get above it, come back and hold it for support to head higher. Apple closed at 149 with a 5-point ATR. We can totally get a reversion to the mean today, but it is OPEX week. And we do not have to get out of our ranges that we've been stuck in and get back to the mean. They could keep it in this range and save the full reversion to the mean for next week. So just be ready for chop and you use your squeeze tops and squeeze bottoms, this range, to risk off of. If we can hold the bottom, go long. If we're rejecting the top, play it short back. Sooner or later, one side's going to break. AMD had this stunning big old daily squeeze that we got near at the lows last week. And we started fighting our way back up. Let me get my drawing set with all my wacky levels. And after such a strong move up last week, it looked like AMD had a lot of relative strength compared to a lot of other names in the market. So on Monday and on Tuesday, I said I love the way AMD is setting up as it starts to pull down to a key support. You get great options to go long on something that is proving it wants to go higher every day. There has been relative strength in AMD. So we got a nice drift on Monday at open into this key support at 93 and a rip up to 98. Then yesterday, we had a nice slow fade, but then a ramp into this key level at 98, which we resisted the previous day. The moment you get through that, you go long. And AMD ripped again yesterday up to squeeze top, slight pullback, and then kept on trucking. This pullback was just that when Powell got on, but AMD soared straight into this daily squeeze top and was using this daily 50 as support. It's a good sign that AMD does want to keep going higher. Relative strength. Again, if we go back to last Monday and draw a range like I had on the indices, look at that. This high to this low, if we just look to the right, ever since Friday, we have used that as support and moved higher into a new range above old highs. So this is what something that is strong and wants to get higher looks like. It's already made it above the daily mean and pushed to the daily 50. This AMD is showing relative strength compared to other things, like Apple that we just looked at. Not above the daily mean. Actually below last week's Monday high to low. We're still below that. So Apple, relative weakness compared to other things that are trying to take us higher. So chips, getting some love. I definitely keep an eye on that. But if market starts to roll, what has been strong can play catch up. And we have the daily mean right back down at 93, where we have found our support this week. So if market does roll, if we give up our trend line on ES and start to head back down into the range of the previous week, we could see AMD play a gnarly catch-up and profit taking. So something to keep in mind. This daily squeeze is still intact, so still going to provide resistance. And have we seen instances where we go from bottom of daily squeeze to top just to come back down? It can happen. So keep that in mind. Amazon. Now, Amazon has been interesting. It ripped last Thursday, and if not to keep jumping back to ES, but last Thursday there was a little popping, but then new lows, and then closing kind of where we open. Versus Amazon, that just ripped all day, did not set new lows, and closed much higher. So there's some relative strength building here in Amazon. Big old up day, another up day, teensy down day, another up day, and yesterday it exploded after the whole Powell dip in the market, Amazon just woke up out of a tight range and exploded up to new highs. It is fading back with the market and is already near yesterday's lows. And you can see this trend line coming off of Monday and Tuesday's lows. We're slipping it a little, most likely to test this Keltner and Tuesday's lows. Should that hold, and should the market hold its trend line and try to move higher, we could see a nice explosive move out of Amazon from this zone right around 22.30, 22.25. As long as we stay above this and the market bounces off of its squeeze bottoms and heads higher, Amazon could have a nice big pop from this 22.30 right back to the highs 23.30, right? So definitely keep an eye on Amazon. We do still have the stock split news. Or the stock split that is coming, in the beginning of June. I don't know, I thought for some reason it was a little later in June, but, that's Shop. Shop's late June. So keep in mind, we only have so much time left. The 6th of June is less than 2 weeks away. No, sorry. 1 week, 2 week. A little less than 3 weeks away. And we only have one more full week because we have Memorial, right? So things could start to get spicy for Amazon leading into that split. And for the market as it gets close to this reversion to the mean and as it shores up liquidity. So keep this on your radar. It's going to do some annoying stuff like show you it's ready and then come right back, then rip up. So patience. Hit it when we should. Cat. Talked about cat. When it gets near 200, it loves to bounce. We got 200. We're up at 212. We do have this tight squeeze setting in on yesterday's range. If cat were to give out 210, that does not bode well for the market. It is back at the daily mean. Should it start to give out 210 and slip down to these other moving averages, it needs to hold 207.5. Below that, it's probably going right back to 200 because it made it to the means and then it's rejecting. It can slip back to that 207.5 just to go from the 21 to the 200 and then right back up. Below that 200, we're going to retest. Below that 207.5, we're going to retest the 200 price level. Sorry, I know that was confusing. This yellow line is my daily 200 moving average. So, need to stay above 207.5. Obviously, if we slip below 210, we're going to be firing the squeeze down, but that's okay if it's just to hit these two daily moving averages and then get right back into range. But if we can hold 210 and head higher, this can get back to the daily 50 at 217, closed at 213 with a 6-point ATR. Can easily get back to this zone with a Keltner and the daily 50, centered around 218. So, would love to see cat fire upside, pull the market up with it, or at least, it'll be leading YM. Facebook. We've got last week's range here. We are kind of rejecting the high from last Monday, pre-market. So we peaked out of that range a little bit. Overall, need Facebook to hold this 199, 198, 36. To head higher. If we start to lose that, we'll be seeing some trends changing in the market and elsewhere, and we'll probably head back down to this 195 and the squeeze bottom. But if we can hold that 198.40, that 199 squeeze bottom to head higher, We've got this 205 to get back up to. And look at that, 202.95 right in the middle. So, got some upside targets for Facebook. We've got some downside should it start to get outside of this range, but we are in OPEX. It can just chop around this range. Google. Google, it's been a little hard to read lately. On that Thursday, it did go down and set new lows, closed higher, gaps up, and then it's just kind of sideways, right? Allowing the moving averages to slowly drift and get tighter for that support, and now we're already below them pre-market. So Google might be a gauge as well if it loses this 22.90. Starting to lose that 22.90 for Google, which has big weight, is not going to bode well for everything else. ES and NQ, as they're near the trend line, they need to hold to keep heading higher. So Google really needs to stay north of that 22.90. If it starts to slip to go test this squeeze bottom, we're probably already starting to lose our trend. Well, we could catch a bounce. Google can slip to this and catch a bounce back up and the market still stay above trend. So overall, not loving this tight range on Google. It's getting limited on its risk to reward, and it's not moving like other names. GS. Banks yesterday were actually pretty strong. They popped first, then slipped back with the market, then headed right back up. So tech was a little weak at first and drug us down. The GS and banks were actually strong at first and then got pulled back, played catch up with the market. So as you can see, this squeeze is starting to open up. So banks could continue to lead. It's a 4-hour squeeze. We're right near the top. We did tap the daily 21. We have the daily 15 and daily 8 as support now. So want to see those stay support. So basically staying above this 308, 310. Can allow us to head higher, get through the daily 21, fire this, a 4-hour? Fire this 4-hour squeeze to the upside to get back to the daily 50. And this first Keltner up, which set up around that 32.5. Which would actually be a pretty good push for GS with a 10-point range closing at 12. It can get back to 22. Oh, okay, yeah, 323.5. There we go. My brain, for some reason, saw 332.5. So, with that almost 10-point ATR, yes, we can get to this today if GS wants to push. So, keep an eye on it as it's about to fire this 4-hour squeeze up. But if market rolls, it could pull it down, causing a rejection of the 21, which would get us back down to that 304 daily Keltner most likely. JPM, not a huge interest, but similar setup. It at least has this nice squeeze, and the bottom of which is right at those daily moving averages, creating a nice zone of support. So JPM needs to stay above that support. I mean, obviously it can slip into it, but needs to get back above it, below 120.5. Everything's probably rolling over, and so will JPM. Microsoft. Just at first glance, all I see are trend lines. So, Microsoft, trend line from the lows, approaching it. Didn't even test it yesterday, whereas we saw ES test it. So Microsoft going to be very key as well. Needs to stay above 262. Very simple. It can tap 262, slip outside of this trend for a second in this squeeze bottom. Below 262, it's losing those things, and it will probably retest it and then go down lower, meaning the whole market is doing the same. So, great gauge there as well. Microsoft needs to stay above 262. Heck, why not even say right there, 262.30, let's add an alert. If you guys don't use alerts, I highly recommend it. That's kind of an early alert to say, we're at the bottom, we're close to 262. If that gives out, get ready. Netflix. I've talked about, Netflix has been weak, but using our gauge of last week's Monday high and low range, it's above it, while Apple wasn't, right? So there is some relative strength building in Netflix, meaning there is some money coming back into Netflix. Oh great, and Wall Street Bets community is getting behind Netflix now that it's been so beat up. That'll make it fun. Overall, very tight squeeze on Netflix. I wouldn't expect it to really break out today. Probably just chop around. I mean, these squeezes weren't even that tight and it still chopped around, so most likely not much going on today with Netflix. Please, prove me wrong, Netflix. Pop up out of that squeeze for no reason. NVIDIA. Sometimes trend lines aren't always the extreme highs and lows. Oh, did you see that? You see how I just did that? I grabbed the early day from Thursday, early day low, and connected it with that after hours, and then look at all these wicks. Boom, boom. So we're getting close to testing that. In fact, I could make that a little less extreme, but either way, we're getting close to testing trend line on NVIDIA, big name. Same premise as everything else, needs to hold the squeeze bottom, needs to hold trend line to head higher. If it gives it up, it's starting a new trend to go back down. But a good hold of that, we continue this whole trek higher to get back to the daily mean at 190. And the next Keltner up is at 203. QQQ. We are rejecting the previous Monday. And today's squeeze bottom is right at that Monday low. So the whole range from last Monday on the Qs, we slipped below that range, we've gotten to the top of that range and peaked out. Now we've rejected pre-market, now we've rejected the range top, and we're starting to head lower. Starting to get below the squeeze. Not looking good. Real quick, let's give a quick check on ES. Ugh. Okay, starting to get our premise unfolding in front of us. Slipping outside of squeeze, hitting daily 8. We got 30 minutes. If this just keeps trekking lower, when this we'll most likely get a cover pop to hit this and reject to short. Now, if we can hold here and start to bounce a little into open, we still have our premise to get back above and head higher. But overall, this is not looking good. In Q, same thing. Starting to not look so good. Back at yesterday's low. So be ready. Said we need to stay above this to head higher. We start to slip below it and then reject it, we're going lower. We can pop right back above it, turn it into support, and keep going. But pre-market trends need to be ready to continue them, right? Only if we get back above this and turn it into support is the long going to change the pre-market trend. Otherwise, we'll pop up, reject, and really start heading lower. What was I on? I was on Qs. Let's check Microsoft real quick too. It's still holding where it should. Okay. Qs. Trend starting to slip. Needs to hold and get back above. By getting down to the squeeze bottom and testing 296, we're already returning below this week's range, back to last week's range, and near the lows. Also a second Keltner there. So let's just keep an eye on things today. Roku, tight squeeze, just like Netflix, right at liquidity. Probably just going to chop around. Not a huge interest. Shop, also not a huge interest. It got through the daily 8 and then just rejection, not looking strong. And its split comes later in June, so it might move in sympathy off Amazon and then see a little bit more love into that split. Snow, not a huge interest. Hasn't even made it back to the daily 15 already. Struggling with the daily 8. So, could be a nice short, but not a huge interest in Snow. SPX, we're going to be gapping down about 42, so we're going to be right back near this daily 8 where we open. Let's see if we get a cover pop above it and then use it as support to move higher. Or if we cover pop to it and reject and head lower. And looking at the Monday range, you know, we barely got above it. And yeah, we'd have to get down to 39.80 to test the lows in the bottom of the squeeze. So we'll see on SPX if it can, on a cover pop, get back above 40.44, which is where the daily 8 will most likely be. Can send us higher. SPY. Trendline, starting to slip. 403.5 will be pretty key. Already starting to try to bounce at it. I remember that being pretty key yesterday as the target to the downside for this zone at 43.5. If you guys remember that, I was calling that out and we slipped it for a second and then right back above it and took off. 43.5 going to be key today. If we start to lose that and 43 and that 42.65, this can heat up to the downside to get to this 4-hour squeeze bottom. Closed at 408, 10-point ATR, 398, squeeze bottom, can totally happen. Square. Not a huge interest. You see what it's done this week? Nothing. So when I said Monday I'm probably going to take a break on Square, kind of happy I did that. It's been in a 3 or 4 point range, so I'm good not playing that. Tesla been pretty quiet this week as well. Waiting on all this Elon Musk Twitter crap news to stop, but I can see a decent, not so sharp trend line forming. So Tesla could be a good gauge for the market if it starts to slip through its trend. Tesla here at this 740 could be a great gauge for a bounce in the market to get back above the trend, right? We seem to be on a trajectory. We're doing a good job of holding this 744. If we slip to the 740 and catch a bounce, get back over the 744, Tesla might try and get some upside love to help lead the market. If we start to lose that 744, 740, and this trend Tesla's most likely going back to 718. The bottom of this probably 4-hour squeeze. Yep, at 713. Let's check in on Vicks. Last but not least, we got down pretty close to that 25. Tested the daily 50 yesterday with the gap down. With the gap down on the market, we're gapping up, obviously, right near yesterday's high and right near a squeeze top, which lends to the idea that VIX gets a little squeeze top rejection, slips below 27. We get a cover pop to try to fill the gap. Then we need to watch VIX around 26, 26 and a quarter. Little zone there getting created from overnight low and the daily 50. So wouldn't be surprised as VIX gets near a squeeze top and near the previous day's highs. There'll be a little pullback, could bounce at 27, could get as low as this zone, and then it could head higher. Or we can slip, keep rejecting 27, reject this zone, get down to squeeze bottom, yesterday's lows, and go further, meaning the market is going to try to push higher. So, always just going to give a thesis, upside, downside, and what it should look like so that we know what to look for, what to react to. Hopefully this is helpful for everybody. Thanks for tuning in. We'll do this every morning around 8:15. And if you're new to Predicted Trades, definitely please come check out our website. You can find a link to join our Discord server for free to give it a try and learn our system before you buy. Thanks again. Hope this was helpful. See you guys in the chat.